we believe investors should be buying actually Chinese stocks, and we've gone overweight on Chinese stocks. And I'm particularly talking about Asia stocks. We've actually been cautious on that market for a good year now. The reason is actually very simple. A lot of these stocks have been, good stocks have been thrown out, like they say, the baby's been thrown out with the bathwater. Good stocks trade at very low multiples. That market is not expensive, in particular compared to many other markets. Think about the US, think about India, for example. Most people are heavily underweight. So I think there's actually opportunities to buy these stocks at reasonable valuations at the moment. So it's a market people should be looking at.
Are there sectors, though, that you should be approaching with a lot of caution, though?
I think, and I just wrote a book about Asian stock markets called From the Ground Up. You have to look at these markets from the ground up. Don't look at just at sectors, but think about the companies. So think about, for example, property, right? We know the property sector has quite a few issues to deal with, and you guys just spoke about this, people being called up to Beijing and so forth. But there will be companies that will come through. They are kind of the bellwether stocks. They have a good balance sheet, but even they trade at reasonably low multiples. So I would look at that. There are other sectors where I would focus on and say China will continue to focus on. Think about semiconductor equipment, technology upgrade, automation, renewables, wind, solar panel producers. So I think there's actually quite a few things to look at. And then you have the consumer space. That's another space where it's all kinds of different companies there, but there are quite a few stocks there that trade at very low multiples. And I think the consumer story in China looks still reasonably okay. For the moment, it's a bit weak, but who says that things are not going to turn around in the next year or so?
Does the same apply for other markets when it comes to the Asia Pacific as well? Do you think that investors are perhaps being too bearish in other parts of the region? Are things fairly priced, or are people being too positive or too bullish on some sectors, some markets across the rest of the Asia Pacific?
Absolutely. So for the region as a whole, if you're somebody who can invest anywhere on the planet, I think Asia does not look expensive. Of course, that's to a large extent driven by China. But China, but in particular also ASEAN markets, where only a couple of months ago there were still big issues with COVID numbers rising. Now that's moderated a little bit again. Actually, those markets look pretty good. A lot of people have fled those markets. They've gone out. They're underweight. They didn't want exposure. The news flow has been very bad. But what we have to look at is also simply valuations, how people are positioned. Now, there's a lot of people who can buy more in China, in ASEAN. The valuations are low. That's where you want to go. On the other hand, India is a market that looks attractive. Growth looks pretty good, but it is really expensive. So I would not want to be overweight India at this point in time. We are neutral, by the way. So there are big divergences and big disparities going on in the region. And I think ASEAN and China at the moment look most interesting.